course, I had to. New Year's Eve lands on a Wednesday this year, and I needed to hop on our Wednesday live to tell each and every single one of you how much, first, we appreciate you, two, how much we love you, and three, how much we're going to continue to support you guys, each and every single one of you, into the new year. But this stream today, this live is going to be just about reflection, a little bit of a look back on this year, 2025, and what we were able to accomplish, what we were able to achieve, build, grow, as a broker owner of a young, thriving, growing mortgage brokerage here local to the Las Vegas and Henderson community. It's important for me to continue doing everything in my power to build, grow, and do the things needed to allow not just our company, but for the people that we serve, the community that we serve, to win. So this is just a little bit of a thank you to you guys. Like, seriously, it was an amazing year in 2025. Throughout all of the trials, tribulations, and the news in the market, the ups and downs, the whatever you see in the news each and every single day about the finance world, the real estate world, the whatever, we were still able to persevere and knock it out of the park, I like to believe. And a lot of that comes with hard work, dedication, and the commitment to, like I said, commitment to you guys that I will not break. Okay. It is something that I am very, very, very serious about. Those of you that know me, know that that's the real deal. So I really greatly appreciate each and every single one of you guys. Again, we're going to talk in some detail specifically about this year, looking back. We're going to go into some of the things, some of the biggest wins that I think, had the biggest impact on me. And then some things maybe some things I learned throughout the year. I was able to change a little bit. I was able to improve a little bit, and I was able to, set myself up for success even more in 2026. So those of you that are here, I appreciate you being here with me. Drop me a line in the comments and chat. I know that we're presently live on Facebook, Instagram, TikTok, LinkedIn, and YouTube. So if you are here, again, we greatly appreciate you. That's actually something in 2025. So talking a little bit about social media first. I originally became a licensed mortgage loan originator in 2016. Okay, so remember, I am second generation in the mortgage business here, local in the Las Vegas and Henderson community. That means my family has been serving the community since actually 1993. So it's actually longer than 30 years. But me, myself, okay, I worked for my mom's mortgage company in 2004, right out of high school, 2005, 2006, and right before I turned the age of 21 in 2007, the summer of 2007, I left the mortgage industry to kind of start doing my own thing, live my own life, be a 21-year-old for a little while, which, to be perfectly honest with you, I regret from time to time based on my professional trajectory in life. We'll talk a little bit more about that. But if it wasn't for that, I wouldn't have met my wife. So things happen for a reason, y'all. But yeah, that was my first stint in the mortgage and real estate business. And that was in, like I said, 2004, 5, 6, and then some of 2007. But in 2016 is when I myself became a licensed mortgage loan originator. Okay. So in 2016 and 17, I already saw where the industry was going when it came to digital, when it came to social media, when it came to becoming, being an educator in the space through social media. And it was something that I really, really wanted to commit to and double down on from the very beginning. So looking back on some of my content that, we put out, that we've shared, that we've been building all of this time, it's hilarious to look back at some of the stuff back in 2017, 18. And I really don't feel like, with me, myself, I kind of hit my stride with social media until kind of like that 2020, 21 COVID-ish era, which even since then, we've made such huge quantum leaps forward when it comes to creating and sharing content. Now, not to say that obviously I'm in any way, shape, or form, an influencer or a savant when it comes to social media, but the more you do something, of course, the more you become comfortable doing it. Okay. So that's one thing that, when we're coaching some of these different, partnership masterminds, and we're speaking to our real estate partners, insurance partners, financial advisors, and we're trying to help them or encourage them to, reach out to their community, their sphere of influence, the people that they can impact right away through the use of social media. So it is definitely one of and has been one of the biggest tools for my success in the last, let's call it 7 years. And it's a way for me to continue to engage, with my current existing clientele, my sphere of influence, the people that are near and around me. And then as we get a little bit deeper into 2026, now we're going to start approaching those in the community that we have not yet been introduced to. So, and that's going to be through things like paid ads. That's going to be through local advertising. That's going to be through many of the systems and foundations that we built in social media. That now it's time to throw some fuel on the fire. Okay, so just an FYI, I'm not a big gatekeeper. A lot of people in the mortgage industry and real estate industry know that whether you're my competitor or not, I'm always willing to help. So even in just this live alone, we're going to talk a little bit about all of my plans coming up in 2026. I'm not going to give it all away, but the most important stuff, really, I'm just going to be sharing. So no gatekeeping, guys. Abundance mentality. I feel like if you believe that there's enough for you out there to go and get it, you'll get it. Okay. If you have this, idea that there's not enough for everyone and you got to fight and you got to scratch and you got to claw and you got to screw people over and you got to that's just not the vibe here, just so you know. And I actually believe that serves me extremely well when it comes to partnering with my clients, right? Because having an abundance mentality allows me to serve from a position of really, truly wanting to help somebody. Okay, really truly wanting to serve someone, really truly wanting to set somebody up for success, whether it's me that can do that or a local credit union or another local partner here in town. Now, many of the times, obviously, it is going to be me because we are the local experts in the community, and I've set my company up in a way that we are serving our clients as best financially possible. But that doesn't mean in some instances, right, that, for example, when I have a real estate partner of mine refer their family member to me and they're, highly qualified and financially able to purchase a new build, why would you not, do everything in your power to purchase that new build with the in-house lender incentives because they're only offering to them and you're going to get that super low buy down rate, all the closing costs paid for? Why would you not do that? Okay. I've actually helped and encouraged a few of my different clients that were in a position to go the new build route take advantage of those opportunities. Okay. It's not a matter of always me, me, me. It's a matter of me helping you win. Okay. So just remember that, guys. But yeah, so abundance mentality, try to, whatever business that you're in, whatever industry that you're in, if you're in the real estate business, there's plenty for everybody. One of the things that I like to keep a close eye on is in our industry, how many people in my community are doing what I do. Okay, so just to give you guys a little fun statistic, back in 2020 and 21, in the heyday of 2 and 3% interest rates and everyone's buying a home and the frenzy and everyone's refinancing and fantastic, we had somewhere in the range of about 250,000 licensed mortgage loan originators in the United States. Okay, a little bit north, I think it was like 260,000 mortgage loan originators, which is a lot. Seems like a lot, right? But that number has since come down quite a bit. Okay, we actually have, I believe, as of the most recent census data, just a little bit north of 60,000 licensed mortgage loan originators. Okay, that means we've lost 70% of the licensed mortgage loan originators, like insane, in the last 4 or 5 years, right? With the change in the market, many of the people in the market cannot survive that. They don't have the systems and processes in place. They don't have the book of business. They don't have the partnerships. They didn't do the work to make this their living. Okay. But I say that because even if that number went from 60,000 to 10,000, okay, even it went to 5,000, if there was only 50 mortgage loan originators in my community, why not me? Okay. Why would I not make sure that I am one of those 10 people prepared enough, educated enough, and positioned myself enough to be able to serve the community as one of those top 10 people, right? Which we presently are, believe it or not. We actually, second year running now, okay? Sienna Mortgage was officially opened in June of 2024, and this is going to be our second year that we're going to be a top 20 Okay. Office mortgage brokerage here in the state of Nevada, and a top 1% mortgage loan originator on my end with the #1 wholesale lender in the country. So, I'm not the biggest on, talking about awards and things like that. They're super cool. I think they're super impactful and important to point out with a lot of people, right? Whether they're clients or partners. And it's a great acknowledgement of the work that's done. Okay. So, yeah, we'll continue to do everything in our power to serve this community the way it deserves to be served. Okay. Born and raised here, guys. I grew up here in Southern Las Vegas. I've been here my entire life. I don't plan on going anywhere. So I need to make sure that we're one of the good ones. We're one of the ones protecting it. Okay. When you're talking about finance and mortgage finance and real estate finance, like this is all super important, big number, big money stuff. So got your back. But yeah, in the new year, we're going to, again, stay hyper-focused on social media. We're going to stay hyper-focused on reaching more members in the community through, like I was talking about, paid ads, local advertising, things like that. It's hugely on my agenda for the new year. And because we put in all the work there, I think it's time to throw some money at it and see what new relationships can be made. Now, in addition to that, one of the things that I feel like sets me apart greatly when it comes to my competition and the people that do what I do for a living in our community is my level of communication that I have, not just with my partners, not just with new clients, but my ability to remain sticky, to remain top of mind, and to remain a constant partner with our past clients. Okay, past clients, realtor relationships, sphere of influence, all of this stuff is super important. Okay. So here in the new year, I'm going to continue to, and I've rolled out versions of this in the past. I've had a weekly newsletter going out to partners and clients, and we have weekly touch points already that, go out through text message. We have anniversaries, birthdays, all of the above that already go out to past clients. But we're going to continue to, I have in the process right now of actually having a new B2B and B2C newsletter created. B2B is going to be all of my business partnerships. So my realtors, my financial advisors, my insurance partners, all of the people on a professional behind the scenes level that we work with on a regular basis will receive a weekly newsletter and touch point from us with all like super top of mind industry specific mortgage rates, programs, community stuff, and just more detailed, how to keep winning. How are we seeing the wins on our side? How can we help you continue to win? What are the things that you need to do to stay a constant winner in this game? You know what I mean? Super important. And then we're going to have a B2C. B2C is going to be to our customers, our past clients, our, SOI that's going to go out every month. Again, a little bit lighter, a little bit more community focused. That's something too that we're creating on social media. We have, a new Facebook group for Southern Nevada specific to powered by Sienna Mortgage, but not for just Sienna Mortgage, for really the community, and promoting community. Guys, again, if you guys were not aware, my wife and one of my real estate partners really knocked it out of the park with a Christmas pajama drive for local foster kids here in the community. And it was always something that I wanted to and encouraged my wife to do and get involved with. And she's super passionate about, especially here in the community. And her and one of my real estate partners really connected on that. And like I said, man, knocked it out of the park. They were able to collect over 1,000 pajamas for foster kids here for the Christmas holiday, which, I think they said that the total of current foster kids here in Southern Nevada was something like 3,000, a little over 3,000. So they were able to provide over a third of those foster kids with some Christmas joy this year. So they dominated, and, more things like that too, more community focused events and more ways for us to get in front of the people in the community. So keep up the good work, Petunia. Phenomenal job. And Patty, again, partnering with Jenny, I really greatly appreciate you for doing that. So, yeah, that's another thing. Again, community events, newsletters going out to B2B and B2C. We have a new CRM, so a new client management tool that we're going to be leveraging here in the new year as well, to help optimize. I feel like one of the things on my end too, only because I have so much experience with this from other industries that I was in prior to, other sales workflows that I was in and involved with prior to coming back into the mortgage space, my customer intake. Okay. So when somebody is referred to me, or introduced to me or what have you, I've got some very specific non-negotiables that I feel like makes especially from a client facing side, right? Makes the introduction, the home buying process, the pre-approval process so much more enjoyable, guys. I have a very, very specific system and process that I outline with all of my real estate partners for not just the introduction on how we kind of get everyone connected together, the email that follows immediately after to set up the first interaction and communication, and then how are we communicating? How are we getting together and meeting with that person the very first time, right? If you're still doing only phone calls, picking up a phone, did they answer? Nope. Okay, that's it. You never call back. You never have follow up. It's like the worst thing that you could possibly do for your real estate partners, right? You don't have any systems in place. You don't have any processes to get them back on the calendar, to get them on that phone call, to make sure, remember, much like myself, right? Because again, as the owner of a mortgage brokerage, I also do not get paid until somebody gets the keys to their house. They accomplish their goal, or our refinance is financed, whatever. That real estate partner that you're working with, that ideally is sending you the lead, right, does not earn a living, cannot pay their bills until that client reaches the finish line, until they reach their goal. So if you, as the mortgage loan originator, lender, broker, what have you, does not have a system in place to make sure and optimize that that person they refer to you gets on that call and moves through the process, you're doing a disservice to that real estate partner or that referral partner, or whomever's introducing you to that person. So very specific systems and processes in place on my end. It's something that I take super seriously. And then that third piece of the puzzle, again, for me is kind of a non-negotiable: Zoom call or in-office meeting, right? I want to get you on the Zoom call because I have it curated. I have it sequenced. I know exactly what we're going to be talking about, why we're going to be talking about it. And by the end of that Zoom call, you're going to know exactly what the next steps are, exactly what we need to have done, if not already, for that official pre-approval. And you're going to know what the expectations are. Okay. And obviously, even more so in person. And we get to see each other in person and shake hands and look each other in the eye. And you can know, right, after that first conversation with me, that my commitment to you as not just your lender, right, but your partner. I'm aligned with you and committed to you well beyond the finish line. But we're going to get you to the finish line first, and then I'll be with you after the fact, right? Even after the fact. So super important. Make sure you have some systems and processes in place, because again, that referral client is your realtor partner's paycheck. Can't pay their bills, can't feed their kids, can't do anything unless that client reaches their goal. So don't take it for granted. What else? So the new year is going to be, I feel like, littered with more educational content from me, more masterminds that we're going to be hosting for our local partners, more, just more. Okay. That's one of the things in our last mastermind that we talked a lot about, that I actually continue to learn from underneath the Hermosi tree. Okay. Those of you that don't, maybe you don't know me super well, but I'm a big advocate for Alex and Layla Hermosi. I actually attended the first business owner workshop at the acquisition.com offices back in January of this year. I actually plan on making a video about that and like kind of my experience at the acquisition.com offices, what we learned, what we went through, and some of the important kind of takeaways from that event. But more, just do more. Okay. We can all do more. I promise you, there should be no excuse for why you can't do more of the thing that's working for you. Okay. If you haven't found the thing that's working yet, you just haven't been doing it long enough. Okay. Because of doing something for a long period of time, right? Putting the hours in, the learning, the what have you, will eventually, right, hopefully, make you an expert at that thing. Once you're an expert at that thing, we need to do more of the thing that works. Okay. So a lot of these things over these last few years, I've really been drilling down into to see what in fact works. And this 2026 is going to be the year of more, 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 more. So one of my huge pro tips for those of you that are in the industry, especially my realtor partners, find the thing that's working for you. Okay. Is doing these videos at open houses or home tours or whatever your thing? Is that what you're really, really good at? If so, do more of it. Generate more business, get more leads. Do that thing that's working for you. If doing first-time homebuyer workshops, if doing local events, if cold calling, if there's so many different things that could be your thing, and do more of the thing that works, right? Don't spread yourself too thin. Don't shotgun across, 30 different things and, see what sticks. Get good at something. Get really, really, really good at something, okay? People want to work with experts, right? When I can sit across the table or sit on a Zoom call with someone and explain to them exactly what's going to happen, why it's going to happen, and how we're going to get there, right? In addition to that, I actually encourage my clients, right? Because of the confidence that I have and the abundance mentality that I have, I encourage my clients that although I am a mortgage broker, right? I have an ability to shop over 50 different wholesale lenders all across the country with the best pricings and rates and all of that fun stuff. I still understand that with some people, they want to do some of the work themselves. They want to vet out, they want to do all of that. I actually encourage some of my clients to do that. One, because I'm highly confident in what we do and how we do it. But two, I want them to go out there and feel the competition. I want them to, hey, is this person asking me the same questions that Mario is? Did they bring up the same things, the same hurdles, the same barriers of entry that I might have that Mario did? Do they understand my qualifying at a level that Mario does? If they don't, that should be a very, very clear, like warning sign of this might not be the partner for you. But I encourage all of them to do that. You know what I mean? That's one thing with us as an educational partner to the people in our community, right? We're here as a resource first and foremost. Okay. I want to be your expert resource to help you win, whether that's me actually getting you to the finish line or not. If there's some better offer out there that you're able to find, like in the case of the builder, or if it's a home equity line of credit and you happen to have a strong relationship with a credit union, we are going to help you. Okay. I'll help guide you down the right path. That's what a partner does, right? That's why all of my real estate partners and referral partners are encouraged to leverage me, to communicate with their clients, to explain to them that I'm not just a lender. I'm not just a loan officer. I'm not that. I'm their partner. Okay. That's because the partner does not drop the ball on them at the 11th hour. The partner does not commission breath them and need to close. Like, we're a partner with you. We're aligned with you. So super duper important. What else? So, okay. New Year is going to be all about more. New Year is going to be all about the content. It's going to be all about reaching more members in the community. It's going to be all about enhancing our existing relationships with our partners. And it's going to be about continuing to build new relationships. Okay. We're blessed to have a healthy book of partners and relationships that we continue to leverage and pour into. It's not just a one-way street with us. We're going to continue pouring into you, giving back, and doing everything in our power, like I said a little bit earlier, to continue helping you win. And what about the market? This is the one part that nobody has control of. But I think I have some good news for you guys. This last few years, since middle 2022, has been quite difficult, okay, for many, 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 many in the industry. I don't want to seem like it hasn't been difficult for us either. I just want to say that I have been able to navigate strategically to come out of the other side better than I started, which that could be for many different reasons. That could be a couple different, smarter, I learned a ton. I was able to build key relationships because of it, whatever. But I'm not going to act like it hasn't been super difficult. Obviously we all understand that in the middle of 2022, rates went from, 3% to, 5.5%, 6% pretty much in 30 to 60 days, super duper quick. And then by summer 2023 into 2024, we were at, 7.5, some lenders 8% interest rates. It was insane, right? To where, as we all know, over this last year in 2025, rates have continued to cool, which is a very, very good thing. Inflation comes down, Fed rate cuts help, of course. They don't directly correlate, but they help. And things continue to improve from a financial market perspective, which is a really good thing. Now, does that mean that we're going to see 2 and 3% interest rates anytime soon, ever again? Probably not. But it's the families that we've helped, the clients that we've served, the ones that still continue to make homeownership a reality for themselves that will continue to improve as rates come down. Okay. That's through something called a mortgage refinance. So if you're one of those people that have continued to sit on the sideline through this wave of the market that we've been in, right? And you're still renting and you're still not putting yourself in a position to become a homeowner, okay, regardless of what the market looks like, I think that 2026, I believe that 2026 is your year, okay? Rates have now cooled down to a position to where more can affordably qualify, and they will continue to cool slowly over the next few years. And with that will come more opportunity for affordability as you are already in the home. So I think 2026 is going to be the year of opportunity for a lot of people that were either priced out or they couldn't afford where payments were in that 7 or 8% rate environment. Okay. With FHA, now we're seeing rates in the 5s. With conventional, we're now seeing rates high 5s, low 6s. It makes a lot of a lot of difference when it comes to affordability, when it comes to total monthly mortgage payment, when it comes to qualifying and debt to income ratios and all of the above. In addition to that, we see continued optionality coming to the table with down payment assistance and grants. Okay. If you believe that because you don't have a 20% down payment that you cannot become a homeowner or that homeownership isn't for you, you are maybe 30 years too late. Okay. The idea that you need a 20% down payment to become a homeowner clearly is not the case, guys. Remember, if you are in fact a first-time homebuyer on a conventional loan, Fannie Mae, Freddie Mac, you're immediately eligible to put down as little as 3%, okay? Remember, the definition of a first-time homebuyer is somebody that has not owned real property in the last 36 months. And if that's in fact the case, you have not owned real property in 36 months, with Fannie Mae or Freddie Mac, you can put down as little as 3%, okay? You don't have to meet a certain income criteria. If you do meet a certain income criteria and you're making at or below the area median income level, you'll have some additional benefits to you as a first-time homebuyer, but not required, okay? First-time homebuyer, 3% down, easy peasy. The amount that you pay in PMI is directly related to the qualifying FICO score, the strength of your credit, and you would be surprised how little that PMI amount would be each and every single month with a strong qualifying FICO score. Now, let's say, for example, you don't have a strong FICO score. You do have a strong income or employment history for the last 2 years, and you have a 3.5% down payment, whether that be saved up in a 401k, in a retirement, or gift funds from a family member. I always have to bring this up because it's hilarious to me how so many people think that an FHA loan is only for first-time homebuyers when that is in fact not the case. So even if you owned a home 5 years ago, 10 years ago, you currently own a home, although it's not the most advantageous when you presently own a home and you're trying to keep it. But using an FHA home loan, okay, will allow you to purchase your primary residence with as little as 3.5% down with some less than favorable credit FICO scores. Okay, I'm talking about sub 700 FICO scores. Easy peasy, no problem. As long as it's above a 580 and you have a 3.5% down payment, we will make you a homeowner. Okay. Now, in addition to that, many of the first-time homebuyer programs are also government insured or FHA programs. So there's also down payment assistance and down payment grants specific to many of the FHA government options. So we work with, like I said earlier, over 50 different wholesale lenders all across the country, all of which have these different down payment assistance and grant options available to you. One of the most popular ones that we actually do not serve because it is a specific state program through a direct lender. So we are a mortgage broker that works with many lenders, This particular program through the state is only if you are a direct lender, but the $20,000 down payment assistance essential worker program, that's an example of an assistance program. However, I actually did a pretty lengthy video about this in the last live that we did and made some reels and all of the above. Just remember, if you're here in the state of Nevada, the $20,000 essential worker down payment assistance is a non-forgivable program. So the amount of money you borrow in assistance has to be repaid when you sell or refinance the house. So just an FYI on that. When you're using down payment assistance or grants, one of the responsibilities of the lender or mortgage partner that you're using should be to have you understand and be educated on all of the nuance on that assistance or grant. Now, I understand a lot of people really don't necessarily care. They just need the money. They want to become a homeowner. Okay, yay. But many of the times, those are clients that come running to me a year, 2 year, 3 year after they purchase that home with the assistance or grant program, trying to refinance, trying to get the lower rate, trying to make their payment more affordable. And then when I tell them, okay, we can absolutely do that. And through your mortgage refinance through FHA, this is what we have to do to pay this off to eliminate. And they're like, wow, they never told me I had to repay the down payment assistance money. And it's just like, yikes, right? It is what it is. You have to repay it in a lot of cases with certain down payment assistance programs, but you at least want to be told that you have to repay it, right? So you want to understand what the moving parts are of all of these different programs. Now, in the way of a down payment grant, where there is no repayment, that it's immediately forgiven to you at closing, we have those too. So, it's a matter of a conversation, a strategy of which of these programs fits your scenario best, right? Many people don't even know that you can use your 401k funds, your retirement funds, your IRA, what have you, prior to retirement age for the purchase of your primary residence, okay? Few different ways. A lot of people like to borrow against their 401k or IRA, where if you're, obviously it's your money that you're borrowing, you're going to repay the money, pay yourself back. And that does not have to be included or factored into your debt to income ratio, which is pretty sweet. We like that. Or you can also use 401k or retirement funds through something called a hardship withdrawal for the purchase of a primary residence. So I bring this up every single call that I'm on with a first-time homebuyer, because many of them just don't know, guys. Real estate partners, people in the industry, don't assume that the person you're talking to, the first-time home buyer, or even the repeat home buyer that purchased something 5 or 10 years ago and they were just working with the wrong people and they were never educated. Don't assume they know these things, right? Bring it up. If they know it, phenomenal, great. But let's make sure that these people are educated, they understand the options available to them, and they're making the most strategic financial decision possible, okay? It's one of the things that we're an expert in. All right, real quick, guys, I'm going to let you go here for New Year's Eve. I just wanted to kind of recap on our year here and what that looked like. Let me just real quick here see if I can share my screen. Hold on one moment, please. Bing, bong. Here we go. Boom. Wait, no. Hold on. Wait. I mean, I guess this works, but there we go. Okay. 2025, y'all. Technically speaking, I have 72 loans closed. However, one of them is not funding because it's a refinance until Monday. So, but extremely blessed. Again, thank you guys very, very much. All of our partners, our community, our family, friends, neighbors, relatives, those of you that continue to trust myself, my company, Sienna Mortgage, right? Where partnership matters, is incredibly important to me. So I greatly, greatly appreciate it, guys. Thank you so much. As you can see here, 71 families served in 2025. Surprisingly, almost half of those refinance, half of those purchases. The family on the purchases side, right? Many of them being first-time homebuyers. On the refinance side, many of them past clients of ours that we helped become homeowners in 2024 and 2023 and 22 that are now getting the opportunity to refinance to lower rates and lower payments. It's all good, guys. It's all positive news outlook heading into the new year. It's going to be our year, guys. 2026 is going to be the year of the the financial reemergence of the consumer. Okay, we're coming back, y'all. We're coming back. I hope you guys have a phenomenal, safe, happy, healthy New Year's Eve. Don't drink and drive. We'll see you guys tomorrow for the new year.